Hey all, Tom Weller here from forexreviews.info. In this video, I just want to go over a simple trick, and that's the understanding of order flow. Now, before I begin this video, I just want to go over order flow a little bit. There is a lot of people out there online that, try to come up with all these fancy things for understanding order flow. And I just want to take you all back to just the basics again. Just the simple basics. Order flow, understanding order flow, the best way of understanding it is looking at places where most likely a lot of people have a lot of the big trades. Okay? And that's the best way of looking at order flow. So I'm just going to show you this really simple trick. Now, this is like looking at major resistance and support again. So if you guys are good with understanding major resistance and support, then we might be going over a little bit of basic stuff again, but still, I'm sure you'll learn something. And I just want you to get this sort of information stuck in your head. That there are certain points where we know most likely there's going to be a lot of orders to sell. And there are certain points where we know it's most likely going to be a lot of orders to buy, and vice versa. Now, it's the same on all pairs. Sometimes they get broken, and a lot of the time that's the banks. And, so that's a constant battle we're having as well in trading is, when are these areas going to get broken and whether to hold on or to cut our losses. So let me just go over really quickly on this pair. I'm on the Euro US daily. I'm just going to show you this really quickly. And it's similar to how I draw support and resistance. So I'll just show you quickly. This is like the line chart, and as you can see, the movement's up and down. Okay, so now when we look at history here, I'll just get rid of the Bollinger Bands. Now when we look at history here, right, we can see that there are these nice highs, these nice lows, and that at certain places on the chart, the market tends to change direction. This is probably the best analysis of what anyone should consider order flow. And, like I said, there's a lot of people out there promoting all these sort of products to do with order flow and stuff like that. You don't need it. This is basically it. It's basically assessing the most likely places, and that probably just computer programs trying to assess major resistance and support. You're just looking for most likely places where most people would be putting in levels to order buys or to order sells. So let's look at some recent order flow assessment. First of all, right, we have a top here that produced here in June, around the June 13, and the market sold off heaps. In fact, it sold off, this is the Euro US, it sold off 600 pips. Then it came back up that whole 600 pips, and interestingly enough, it produced another top, right? Now, when it produced this other top, why did the market just keep selling off in this one spot? Well, that's to do with order flow. Here, we know there's going to be a lot of orders to sell. People aren't interested, well, the big traders, and this is what order flow, you're not really interested in the small traders. You're interested in trying to predict where the big traders are willing to risk their money. And basically put, the big traders are willing to risk a large amount of money at these tops. You get me? So 134, where it had fallen a great deal, the big traders are willing to risk selling, right? And they're willing to risk selling big amounts of money. Now, you might not know this as well, so all these orders to sell, when the market drops down and just keeps dropping, how do you know when these guys have taken profit? Well, when you get a retracement. Just recently we got this nice retracement on the Euro US where it's coming back up. Now, a lot of these traders, when they sell on these big pairs, they take profit somewhere. It looks like they took profit around 131, as an example on this pair. So they took the pair down, say they put an order in to sell at 134, which is what it looks like. They took profit around 250, 270 pips. And the market just had a bit of a relief. This is what we call a relief rally in a trend, right? And if the market just keeps trending, unless of course they decide not to sell into this relief rally, the market should continue on its way. Now what they do is a lot of the time they'll wait for it to get to next structure, right, to sell again, so that they're not risking as much pips. They're actually just risking a little bit of their profit from their previous trade. So that's why the Fibonacci, the 50% to the 61.8, gives them another nice relief to be able to get in again. So we know that when in a trending situation, the 50 to the 61.8 is usually when these big traders get in again. Like I said, it's always good to wait for price action on the 4-hour, daily, 1 hour, and look for weakness in the pair when you're looking for a downward continuation move. But what I'm trying to get you guys in the habit of is looking for areas where the big guys are putting in orders to sell or buy. As an example, when you look down here, and a lot of people just go, oh yeah, that's support, that's support. That's great. It's support, but it's also an area of support that is different to just all the other areas of support. This is a very low support, and it's an area where the big traders tend to buy. Now, if you want to get into the mindset of the big traders, you're just going to be looking at these zones to trade. You're not going to be interested in trading the in-between zones that much. Okay? So what I'm trying to say is identifying these major resistances, these major supports, in order to understand the order flow. Where are people willing to risk the most amount of money? And that's basically it in a nutshell, guys. So, and when you look at this pair, as you can see, we had a high here, so that you know if this pair did all of a sudden rally, like when it was up here, just say it did break through this area and these guys took a little loss. Say it did rally all the way to 136.40 or 50 area. See how we look to the left? Do you think that a lot of people would put in orders up here to sell? Or do you think they'd put orders in to sell earlier? They would put all their orders up here, guys. This is where they'd put them. They wouldn't put them anywhere in between here. There's no point in doing that to these big traders. Why would they take that risk trading in between structures when they can just trade at identified tops? And that's it. Now, occasionally, you might get false readings where you're thinking, okay, I might see how these two sold off quite nicely here, and when you couldn't see ahead, you might have thought that here, when it came back up here, you might get another selling opportunity. Well, if you just put an order in, you would have been wrong. And that's what's great about price action. See, if you'd gotten a dive here, this would have been a really great sell, right? Because the price action would have told you that the big guys are getting in and they're taking profit. They're taking profit on their buys or whatever, and the market's going to retrace, etc., etc. So this is what you're looking for as clues. Looking for tops, looking for bottoms, looking for the most likely places where people are going to sell heavy and people are going to buy low. And that's the trick to getting really, really, really high probability trades with order flow. And basically just to clear the confusion with this word that seems to almost be like a mystical word in the Forex and stock community. It's not a mystical word. It's just really a support and resistance line area where most likely people are going to be putting a lot of orders. Okay, and we can pick them. You just got to pick where, if you were going to be risking $10,000 on a trade or more, where would you put your order? Would you put it in between here when the market's coming up, or would you put it at the extreme high? Of course you'd put it at the extreme high. And so that's what you've got to visualize, these areas where you know most likely you're not just going to have price action on your side, you're also going to have the order flow understanding of where the big traders are trading. Like I said, the 128 area, you can tell this is an area where whenever price gets down here, the big buyers get in over and over and over again. And like in between 134 and this one, 136 area, just above 136.50, that is also an area where people would sell really, really heavy. And in between, it's areas of continuation or it's areas of consolidation. And so you're looking for where are the market, what are these traders going to do? They're going to trade the Fibonacci 61.8, 50%. So you're just looking to see what they do when there is retraces. And so that's where price action comes in. It helps us to understand where is the price going to continue in its direction, you know, so that we can keep going in the direction of the trend or the consolidation or whatever the sort of market it is, range, etc., etc. And that way we can be dynamic to how the market's moving. Oh, it looks like a lot of buyers are going to jump in here. Or, oh, it looks like a lot of sellers are going to jump in here. Oh, I'm getting some good price action. This gives you extra confluences. Anyway, I just wanted to share this tip on order flow. And if you have any questions, feel free to comment below. If you haven't done so already, come over to my site, forexreviews.info. You can subscribe, 100% free, doesn't cost anything. And yeah, you just add your name and email. Like I said, it doesn't cost anything. And yeah, have a great trading week, guys. And I'll speak again soon. Okay, bye for now.